So, seeing how CNN is covering the firing of Lisa Cook, one of the members of the Board of Governors of the Federal Reserve, I can see why people are so uninformed. Because they're kind of describing this as like, oh, the Fed's really trying to protect itself, and how Trump's been attacking them, and they have to maintain their independence. Almost depicting the Federal Reserve as protecting itself as some type of turf war and not a thing to keep the American economy from collapsing. And in fact, Donald Trump's been going after Jerome Powell, the head of the Federal Reserve, for some time. So here is why it's so important for the Federal Reserve to be independent. And this is pretty simple. The Federal Reserve doesn't actually set like interest rates. Like when your bank charges you a certain amount for a loan, that's not the Federal Reserve. Instead, the Federal Reserve sets the interest rate in which banks can borrow from other banks. So at the end of the day, the banks have to have so much money. And if they don't have enough money, they'll borrow it from other banks. And if the rate in which they borrow from other banks is low, they're willing to borrow more money from other banks, and therefore willing to lend out more money. So why does the president want to influence this? Why would the president want to control the interest rates? Well, here's the thing. Basically, let's imagine you're trying to gin up popularity, right? And one of the biggest factors in the popularity of the president is the economy. Is the economy stupid? So what you can do is you can just inject a lot of cash into the economy, and it'll stimulate the economy, at least for a short period of time. So if you have midterm elections, or if you're running for a second term, or if you're a wannabe dictator and you want to run for a third presidential term. So lowering the interest rate puts money into the economy, stimulates the economy, and can make you more popular. So what's wrong with that? Well, the problem with that is that when you put money into the economy, when you're increasing borrowing and spending, well, you're stimulating it, and the end effect can be inflation. The Federal Reserve tries to keep an inflation rate. I think its target's about 2%. And you can see this in plenty of countries where the executives, the people in charge, have influenced the monetary policy, interest rates and whatnot, and caused hyperinflation. Argentina, big example. But not only is this a problem for the U.S., but economists say that other countries look at the monetary policy of the U.S., and if they see the U.S. doing this, then they may enact similar policies. So imagine dozens of countries going into hyperinflation. But to a lot of Americans, they don't really see how stupid it is, because the news doesn't exactly do a good job of explaining it.